It's the first trading day of the month, and gold is starting the week off on a solid note. We're speaking with Kitco's Global Trading Director, Peter Hug. Peter, good to have you back on the show.
Nice to be here.
So gold again tops the 1122 chart point, Peter. Now you have said you want to express a major upside here for gold, but the choppy action is holding you back?
Well, I just get emails and calls from investors on pretty much a daily basis, and they're all asking why isn't gold at $2,000 or $3,000 an ounce, and I'm not never been one to suggest that parabolic moves happen in a metal, and so I'm reluctant to suggest that gold should be worth $2,000 an ounce. I consider the current market constructive. I think given the macro forces at work, both on a global basis and domestically in the U.S., are price supportive for gold. But as I've mentioned a number of times over the past few weeks, this is a trader's market. Technical levels need to be taken out. This is not going to be a straight move. But the market, as far as I'm concerned, currently, given the weakness that I continue to expect in global equity markets and weakness in oil and just the dislocation of capital that from China's slower growth indicates to me that there's a good fundamental case to be made that gold has higher to move. And again, being a trader, I'd like to see technical levels taken out before I start jumping onto a bandwagon, as some of the other pundits do, and suggest that gold is going to double or triple from here.
All right, Peter, well, you're right. A lot are questioning, is a 2008, 2011 scenario now in the cards here for gold? Now, I know you've been watching the gold-silver ratio closely here. Can that offer any hints?
Well, again, I'm a trader, so when I see silver approaching 80-to-1 ratio to gold, it's happened a couple of times over the past 2 years. My trading instinct would be, again, as a trader, to short gold and go long silver on a ratio play. And so far, both times that that maneuver has been employed, it's proven to be very profitable. Usually when silver gets to an 80-to-1 ratio, it's bounced back almost to 75-to-1. So you can pick yourself up about an 8% trade with a hedge on the short gold side. So silver this morning was just slightly over 79-to-1. So I'm watching it, and if my theory is right that gold is forming a base and is constructively moving higher, then I think silver is undervalued relative to gold.
All right, and just to wrap, Peter, let's talk oil prices, which are pushing stocks lower as investors look to move on from a dismal January. So does oil become even more important to watch as we talk gold?
I think what oil needs to do is stabilize. There's been some rumors in the market over the past week that OPEC and non-OPEC countries are going to get together to cut production. I find that highly improbable, but it was enough of a catalyst to move the market up from the lows of 26 to 34 this morning. And, I still consider the oil move on the upside, the recent upside move in oil, basically to be a short covering trade. I don't think the fundamentals have changed. I think supply is still an issue for the market. And, I realize it's only February 1st, but, there's only a couple of months left of winter. So, once we get the seasonal demand of oil out of the way, this market could come under some further pressure to the downside.
Peter, thanks for your thoughts today.
You're welcome.
And thank you for watching this edition of Kitco News. We'll see you with Jim Wyckoff up next.